Hey guys, Jared Wesley here of Live Traders, and we're back for another quick tips lesson. Today's topic, guys, is about how you can take one stock and trade it all day. Definitely at least up until the lunchtime portion of the day. So what happens, guys, is every morning we go and we build a watch list, right? These are our favorite stocks, and we rate those stocks level 1 gap, level 2 gap, level 3 gap, etc., and so forth. And what happens is a lot of you guys, if you don't get exactly what you're looking for in the first 5 minutes a day, you scrap the stock. Or worse yet, if you do trade the stock early in the day, you're like, yeah, I got my money, I'm done. I don't need to trade that stock anymore. So today's lesson is twofold. It's one, stay focused, because that one stock that you did trade and make money on, or that one stock that was really good in the pre-market, but you decided to throw it in the trash can too early in the day, it might provide 2 or 3 more entries that day. So why sit there and scan stocks you haven't seen when there are stocks that you've already seen and you know the gap is good? And 2, we'll talk just a little bit about how you can accelerate some of your winners by adding to some of those winners. All right, so I want to talk about Peri today, P-E-R-I. This was a stock that was on our morning watch list today. Okay, why? Well, it had a wide range bar a few days ago, I think it was last Wednesday, and then a couple narrow range red resting bars. So a little bit of a 3-bar play, even though it was kind of second, third day up. So you had kind of a pseudo 3 or 4 bar play forming on the daily. And today we wake up and there's this beautiful gap over those red bars, over the wide range bar. And if you look to the left, right, gotta always watch Beyonce. If you look to the left, there's a topping tail right around 21 to 21.20, somewhere in that range, okay? And we really needed to clear that area. Well, the beauty of PERI today is not only was the daily gap nice, it provided multiple entry points. And this is exactly what I'm talking about. You have a really nice gap. And what happens is some people will see Peri shoot straight up off the open. And that's what it did. The first 2, 3 minutes, 4 minutes a day went straight up. And you're like, that one's done. I'm not going to trade that today. Wrong. What happens on Peri here on the 2-minute chart? Third bar of the day. So you have an igniting bar on the first bar, igniting bar on the second bar, and then the third bar of the day, you have this beautiful narrow range resting bar with a relatively equal high to bar number 2. And remember, for those of you that trade 3-bar plays, we need it to be the first or second bar of a move. Well, this happens to be the second bar of a move, followed by a resting bar, and then blast off. So you would get in this at $21.25 with a stop loss right around 21. So you got about a 25-cent stop loss, give or take, okay? And you need about a 50-cent move. And this ends up going about 2R, just around, maybe a little more, maybe a little less, depending on where you got filled, it goes about 2R. Well, some traders would sit there and go, I'm done. And there's nothing wrong necessarily with being done for the day, but why take your eye off a stock that already had a really good gap? So what happens after this thing goes a couple R? It starts to pull back, pull back, pull back, pull back. And as it's pulling back, you're losing less and less and less and less interest in this stock, right? You're not interested anymore. Well, ultimately, Peri goes back down to the low of the day, which is right around 2060, 2070 area, and it retests the low of the day on this beautifully smooth pullback on the 2-minute chart. What happens? It bounces back up. So now we have a double bottom retest and failure. In this case, it doesn't fail though. It's just a double bottom retest on a very strong stock. So you get the first entry on the 3-bar play, okay? Then you still keep it on your watch list. I don't mean you just have to stare at only Peri for the next hour. That's not what I'm saying. I'm simply saying watch the stocks that were good to you in the morning. They usually, not always, but most of the time give you a second entry or at least an area to add at the very least, right? So in this case, it gave you a second opportunity to get in. In this case, it was that double bottom retest. At right around 2080, it sets up a buy setup, 100% double bottom retest buy setup at 2080. The stop loss is right around 2060, so a 20-cent stop loss, which is just below the low of the day. It bounces back up, has a nice little pullback, and then what happens? It starts to consolidate, right? And the consolidation is right around 2150. So think about that already. So you got in this at 2080 with a 20-cent stop loss. By 2050, you're already up 70 cents. You're already up 3.5 to 1 on your money. So what I would do right there on the way up, perhaps when you get 2 to 1, so when you get about a 40-cent gain, call it 21.20. Take a few shares off, right? Lock some money in, take a few shares off. And then the stock continues higher, and then it consolidates out right around 21.50. Well, what do? You add back some of your position. So you'll add back around 21.50, the shares you sold at 21.20, right? And then you'll raise your stop loss all the way up to like 21.20, 21.30. So guess what? Now your cost average is going to be somewhere around 21.15, give or take, right? If you add 100% of your shares. If you had 1,000 and you add 1,000, well, you'll be around 21.15. But your stop loss will now be 21.20, 21.30. So you're already in the money. Even if it comes back, you're already in the money. And what happens? It continues higher. PERI continues to go higher from 21.50. And then as it pulls back, raise your stop loss up. All right. So this thing left a little bottoming tail pivot, raise your stop to like 21.75. It continued higher. You get some bottoming tails, raise your stop to like 21.90. So now all of a sudden, you took the first trade at 21.25, you made 2 to 1. You took the second trade at 20.80, you got 2 to 1, you sold half. So you locked in 1R at a minimum. So now you're already up 3R on this trade, 3 to 1 on this trade, okay? Then you get an area and opportunity to add at 21.50 and raise your stop. So now your cost average is already in the money, all right? At least about a half of an R in the money. So the worst you can do today is make 3.5R, all right? And then it continues higher. And then you raise your stop to 21.75, but your cost average is 21.15. So now all of a sudden you have another 60 cents and back to another 3R. So now the worst you can do is 6R today. It continues higher, pulls back, continues higher, raise your stop to 21.9. Now the worst you can do today is 7R. And then what happens? Ultimately, Perry comes back and would have tagged you at right around 21.90. You would have made 7R on this trade. Now, I want you to think about what I just said. You could have taken the first trade on Perry and made 2R and been done. That's fine. Or you made the 2R and you're like, I'm done with Perry, and you start focusing on all this other stuff. When the money was already in your hands, it was right in front of you, but you lost focus, or you threw out a stock when it still had something left to give to you. All right. So in this case, it pulls back, gives you a second entry at 20.80. It gives you a third entry at 21.50, and then areas to trail it out. You could have made 7 to 1 just by hanging out trading one stock. Guys, there are tons of traders out there that literally trade a small basket of stocks. They literally trade like 5 stocks. That's it. They just rotate those 5 stocks. I'm not saying you have to do that or even that you should do that. I'm simply commenting that if you have a good stock, a nice gap, don't throw it out so easily, so cavalierly, so early. Most of the time, if they don't look good in the morning, they usually turn around and look good in the afternoon. Not always, but most of the time. So keep those stocks on your list. You will regret it if you don't. This doesn't mean you can't scan for other stuff. Doesn't mean you can't look for other opportunities and other stocks on your gap list. But don't forget the stocks that you spent all that time in the pre-market in the morning scanning for. Don't forget about them. It's costing you money. All right? So I hope you guys learned a little bit about holding on to stocks, watching them so that you can make more money on a second or a third entry, as well as adding a little bit to a trade to make more money. I am Jared Wesley of Live Traders. We'll get back at it again soon.